Hello, and welcome to this video depicting the federal tax law updates for tax year 2013. During this short presentation, we'll cover the following topics. First, new permanent provisions, as well as provisions that expire at the end of 2013. We'll then finish up with an introduction to the new IRS tool for tracking amended returns. As always, please note that additional federal tax law information can always be found on the CrossLinkTax.com website. Again, that's CrossLinkTax.com. Now let's get started with the new permanent provisions. And we're going to start with a new 39.6% tax rate for high-income individuals. The definition of high-income individuals will people that are filing single will be $400,000, married filing jointly $450,000, head of household $425,000, and married filing separately $225,000. Also, please note that the 10, 25, 28, and 33% brackets have been made permanent, and that the 15 and 35% brackets will remain as well. Additionally, with regard to capital gains and dividends tax rate, please note that there'll be a new 20% rate for taxpayers in the 39.6% tax bracket. Next up, let's take a look at itemized deduction phase-out. Please note that the deduction amount will be reduced when the adjusted gross income reaches the following amounts. For single, $250,000, married filing jointly, $300,000, head of household, $275,000, and married filing separately, $150,000. Now, the reduction is the lesser of 3% of the amount over the taxpayer's threshold amount or 80% of the total itemized deductions. Next, let's look at personal exemption phase-out. Please note that the exemption amount reduced when the adjusted gross income reaches the following threshold amounts. For single, $250,000, married filing jointly, $300,000, head of household, $275,000, and married filing separately, $150,000. The total personal exemption is reduced by 2% for each $2,500 or fraction thereof by which the AGI exceeds the threshold amount. Now, the threshold for itemized medical expense deductions have changed as well. The threshold percentage is now 10% of the adjusted gross income for taxpayers under the age of 65. Next, we'll look at additional Medicare tax. There'll be an additional 0.9% of wages and or self-employment income that exceeds the following. For single, head of household, or qualifying widow or widower, $200,000, married filing jointly, $250,000, and married filing separately, $125,000. Now, this will be calculated on the new Form 8959 and will appear in the Other Tax section of Form 1040. Employers are required to withhold this additional amount for individuals they pay in excess of $200,000 per year, and others affected individuals will need to adjust their withholding, adjust their estimated payments, or pay the extra amount when they file their return. Next up, we're going to talk about net investment income tax. Please note that there'll be an additional 3.8% tax on net investment income when the modified adjusted gross income exceeds the following. For single, head of household, or qualifying widow or widower, $200,000, married filing jointly, $250,000, married filing separately, $125,000. Now, this will be calculated on the new Form 8960 and will be included in the Other Tax section of the Form 1040. Now, new investment income is defined as interest, dividends, capital gains, rental or royalty income, and non-qualified annuities. Additionally, it can include income from businesses involved in trading financial instruments or commodities and passive activity business income. And investment income may be reduced by expenses that are allocable to investment income. Finally, the IRS announced on August 29, 2013 that all legal same-sex married couples will be treated as married for federal tax purposes. The new rule applies to legally married same-sex couples regardless of whether they reside in a state that recognizes same-sex marriage or in a state that does not recognize the validity of same-sex marriages. It does not apply to registered domestic partnerships, civil unions, or similar formal relationships recognized under state law. Next, we want to take a look at provisions that are expiring at the end of 2013, and they are as follows. First of all, the educator expense deduction, Form 1040, line 23. Tuition and fees deduction, found on Form 8917. Itemized deduction for sales tax on Schedule A. mortgage insurance premiums deductible as qualified residence interest on Schedule A, the 50% bonus depreciation, increased Section 179 expense deductions, $500,000, qualified real property category for Section 179, and the 15-year straight-line depreciation for qualified leasehold restaurant and retail improvements. Other provisions expiring at the end of 2013 include tax-free distributions from IRAs for charity, non-business energy property credit, Form 5695, Part 1, exclusion of gain from income for foreclosed home mortgage debt, Form 982, work opportunity credit, as well as work opportunity credit for hiring qualified veterans. And finally, we continue with even more provisions that are expiring at the end of 2013. This will include election to accelerate AMT and research credits in lieu of additional first-year bonus depreciation, 100% exclusion of gain on sale of qualified small business stock, enhanced deduction for charitable contributions of food inventory, employer wage credit for activated military reservists, and 18 other business credits mainly applicable to corporations. We'll now turn our attention to Where's My Amended Return? This is a new tool on the IRS website. It's applicable for current year and 3 prior years' amended returns. It's located on the IRS website in the Tools section of the main page. It was rolled out on March 18, 2013, and the address can be found here on the screen. How it works. The taxpayer enters their Social Security number, date of birth, and zip code. They can receive the following information regarding their amended return: confirmation that the IRS has received it, update on the current status, as well as the estimated completion time. That brings us to the end of this presentation on the federal tax law updates for tax year 2013. We hope you found it informative and that it helps you prepare for the upcoming season. And remember, you can always look for additional updated information pertaining to tax law changes at CrossLinkTax.com.